this short-term bank lending, rescue bank lending project that the Federal Reserve came out with. Well, all of these loans, and by the way, it's up to its all-time high. I don't know the exact number, well over $100 billion, but it all comes to an end in March. There's just a few months left before these loans, these emergency loans that were made to the banks in distress, have to be paid back.
Earlier in the year, during a severe regional banking crisis that threatened to pull down the economy of the United States and caused 3 of the top 5 U.S. banking failures, the Federal Reserve announced an emergency lending facility to help banks out of the challenges caused by the high interest rate environment. That funding facility has hit a record high of around $114 billion, and the money will be due in March 2024. The problem is, the banks that owe this huge amount are still heavily challenged by the problems that caused the April or May banking crisis. For years on end, the Federal Reserve intentionally kept interest rates low under the ill-advised rounds of post-Great Financial Crisis quantitative easing program. Then, in 2022, after it allowed inflation to grow to multi-decade highs, it started jerking up rates at the fastest pace ever recorded. This put a lot of strain on banks as their large bond holdings quickly went underwater. In addition, the lenders have been registering very large outflows as investors move toward more profitable ventures in the high interest rate environment. This all means that the troubled financial institutions have no money to give to the Fed when the time comes in a few months. Renowned bullion dealer and commentator Andy Schectman believes this is all strong evidence that we are about to have another banking sector crisis in 2024. This time, bigger and more severe, with many more casualties in and outside the U.S. banking sector. According to Andy, this is why even the most well-informed investors are buying gold and silver at record high amounts. Andy believes these investors, from large money managers to various central banks worldwide, see what's coming. They are running towards the only proven safe haven assets that have protected investors for thousands of years. At the moment, this might not seem obvious now because of the continued suppression of prices. However, Andy is certain that the suppression of prices will not continue for much longer. But by the time it stops and everyone realizes what's really happening, it will be much too late for people to start stacking because prices will be through the roof. We will now bring you clips from Andy's recent interview with Liberty and Finance. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Let's talk a little bit about silver. What we have been seeing in silver, I've talked a lot about the bleed down in the exchanges, in the silver market and in the gold market. But what we have been seeing is a lot of over-the-counter trading. And over-the-counter trading implies that deals are being done off of COMEX. The demand is being satisfied elsewhere, whether they're disintermediating and going directly to the mines, directly to the refineries. They are not going to COMEX. We are not seeing the bleed down in COMEX the way that we did in years past, although it is decreasing. I think once you get to a certain level where you could argue we're already there now, you continue to bleed it down and it will create too much awareness of what is happening. But, you have the Silver Institute telling us that, again, we're going to have another massive shortage in mineable silver, which is about 1 billion ounces, versus demand. And that demand is increasing. In fact, the non-investment demand to 879 million ounces, if I'm not mistaken, is the highest level in history. So you have an increase in industrial demand for silver. And we've talked at length about how for the last 3 years, silver has been the primary focus of all of our sales. This entire industry has been selling silver far more than it has been selling gold. It's a situation where you only have, according to these numbers, about 140 million ounces or so available for investment. Well, I think that if you were to add up all the investment that's gone on in 2023 across even the North American industry, I think it's far greater than 140 million ounces. But nonetheless, I think we are entering a period of time where the entities that are trying to accumulate silver are going to have to be far more creative. And when you talk about the Silver Institute's latest calculations, you have 60 million ounces that just disappeared into India in October. You had 10 million ounces that were imported into China in October. And, you know, when you talk about Turkey silver imports in 2023, almost 26 million ounces. Well, all of these ounces, where are they coming from? And a lot of it is not coming from the COMEX anymore. They are being more and more creative. They're doing things off exchange. They are disintermediating. They're pulling it off the exchange. And again, little by little by little by little, the silver and the gold supply are being drained by the biggest money in the world. And that doesn't even take into account almost 3.6 million ounces of silver that have been taken out, delivered out of the world's ETFs on Friday, just alone on Friday. So they're draining the ETFs, and you're seeing all of this gold and silver being quietly and really in a very opaque manner drained every which way they can. And at the same time, you have gold buying by the central banks, again, starting to accelerate. In the last 3 months, we've seen gold up buying by the central banks of 140% higher on average than we've seen in the last 5 years. 140% higher than the average of the last 5 years. In the last 3 months to September 2023, the top 33 central banks purchased on average 66 tons of gold per month, compared to 28 tons per month in the previous 5 years.
Countries including China, Poland, Turkey, India, and Uzbekistan have been accumulating more and more gold for about 18 months, according to reports from the World Gold Council. The People's Bank of China released its gold reserve report for October earlier this month. The report shows a gold reserve of 71.2 million ounces, approximately 2,215 tons, an increase of 740,000 ounces, approximately 23.02 tons, compared to September. This is the 12th consecutive month China has reported an increase in its gold reserves. It's up by 204 tons since the beginning of 2023. While the Asian country continues to stockpile gold, it is also drastically reducing its holdings of U.S. treasuries. According to Andy, this is just the tip of the iceberg. Let's get back to the interview as the Miles Franklin president outlines other important developments that hint at what's coming in 2024.
I think, the bottom line is that the path that we are on in debt accumulation is not sustainable. And I think that, there is a point at which, I think people are going to start to really push back against the West, against their massive indebtedness and the ability to repay it. You take a look at the last Treasury auction for the 30-year Treasury, and there wasn't enough demand for what the Treasury was trying to sell. This is something that I think we will see much more of as there is less demand and appetite for U.S. debt as it continues to grow at an exponential rate. And I think, the bottom line is that when a company or a country or an individual takes on too much debt for a sustained period of time, it is going to face, if nothing else, a decline in its power and its authority. Let's see, what else can we talk about? We talked a little bit about silver on COMEX. We saw last week 1.4 million ounces of silver delivered. Open interest in silver is now 250% of all the vaulted silver and almost 1,800% of registered silver. Those are the bars available for delivery. In other words, it's 1,800% rehypothecated. So 1 out of 18 gets their silver bars when the rest get nothing if they all stood for delivery. And, look, at some point, the shrinking supply of silver coupled with the rising demand. Look, we're massive rising demand, the highest ever in industrial. We see huge demand for silver in monetary. There's been the articles written by the Pickaxe lately that I find incredibly compelling, talking about silver's use militarily. Now, we've talked about 500 ounces in the tip of a Tomahawk cruise missile many times, but the Pickaxe article is quite compelling, and it talks about a huge amount of silver being used in everything in the military industrial complex, from submarines to high-tech weaponry to ICBMs and all of the things that indisputably need a tremendous amount of silver. something interesting to think about. A couple other things worth talking about. We did say that the Fed's emergency lending facility or funding facility hit a record high, $114 billion, and this money has to be paid back in March. As far as we know, that's when it ends. We saw another $3.3 billion in outflows. Over $1 trillion have gone into money markets since the Fed started raising rates. The question is, why would anyone leave their money in these banks when you can get 5% in a money market fund backed by the overnight reverse repo market of the Fed, essentially risk-free? The banks are in big trouble. And I know offline you were telling me about your interview you did with Gregory Mannarino, someone who I try and follow everything he's doing. And his concern is with the banks as well. I agree. The banks are in big, big trouble. They are massively over-leveraged and undercapitalized. And the more that we see being drawn out of the banks, it's just going to put more and more stress on the entire system, which is one of the reasons why I think you see big money accumulating gold and silver. There's a term that you can basically say it's called inside money versus it is outside money. When you hold gold or silver, whether you're a country or an individual, if you hold it in your basement, you control your own finances. Or if you're a country, you control the monetary base. But when you hold US dollars, you have to hold those in a bank. And that bank is where the problems are. And I think you are not really in control of your money. You are at the mercy of someone giving you access.
According to Andy, despite all of the evidence piling almost sky high, many investors are still completely oblivious to what's going on, which is the only reason why metals availability and premiums have not been affected. With the tiniest whiff of trouble, that will change almost overnight. And when that happens, we are going to see gold and silver prices really take off. Do you agree with Andy's outlook on the metals industry? Please share your thoughts in the comments section below. If you are yet to do so, also ensure you like this video, subscribe to the channel, and turn on the notifications bell so you never miss any of our other videos. Thanks for watching.